How's it going, everyone? My name is Keenan and welcome to my channel where we talk about personal finance, investing, construction, and real estate from just a regular guy here in Hawaii. Tomorrow is going to be a big day. A day that I think people have been just waiting to celebrate, debating amongst friends and family about what the outcome is going to be. Yes, tomorrow is National Sandwich Day, and there's also an election. But yes, November 3rd will be election day, and that's got people feeling a sort of way when it comes to the stock market and their investments. That, coupled with the current pandemic, our current economic and unemployment situation, and the nagging question of whether or not you should start an OnlyFans, all these things just add more concern, confusion, and hysteria to the whole situation. So if you need your invested money immediately in the short term, I would say there is some cause for concern. However, if you are like me and any money that you're putting into the market is for 30 years down the line, this current situation can actually create some great buying opportunities in the coming weeks and months. So let's get into it, starting with the election. So I think it is a fair statement to say that there is some level of uncertainty with this election. Uncertainty brings fear, and fear brings volatility into the stock market. So in the immediate short term, yes, I think there could be some stock market ramifications depending on who is elected. However, over the time of the elected president's entire term, I really don't think it matters that much. Currently, the S&P 500, the index that tracks the top 500 companies in the US, has fully recovered from its initial drop in March due to the first lockdown and is now at an all-time high during these trying times under the Trump presidency. So people argue that Biden's tax plans and monetary policies when it comes to companies will stifle growth and impact the markets. What people sometimes forget is that these policies and these ideas that these politicians come up during these times take a long time for it to actually get implemented, maybe even years. And this usually happens because you have to go through all the proper channels and get all your approvals, and that can become a lengthy process. And also, anytime there's a potential for a change in the presidential regime, there's some sort of economist or some sort of article saying that there's going to be a stock market collapse as a result. As you can see from this graph, for the most part, whether the candidate elected was red or blue, the S&P 500 or the top 500 companies in the US continue to grow over the presidency. And that kind of shows me that over a long period of time, whoever's in office doesn't really have a big impact over their entire presidency on what's happening for the top 500 companies in the stock market. As the US operates as like a market capitalistic economy, as long as people are continuing to innovate, work hard to overcome obstacles, and just keep progressing, the economy will continuously grow, and I think that those are attributes that are not related to who's in the office. And we've truly seen that in full force over the past several months. But in the short term, like the first few months after the election, I would expect to see some dips in the market. And this could be due to increased paranoia, rioting, a contested election, lack of a new stimulus bill, and the eviction moratorium ending at the end of the year, which will affect people's housing situations. All of these things carry a nature of uncertainty with people's finances, which will lead to emotional decision making, which will lead to volatility in the markets. But like I said before, the likelihood of all these things completely tarnishing the US economy and having everlasting effects on the market are kind of low. But what's been going on in this election that hasn't been happening for most elections previously is this thing called the COVID pandemic. Cases have been going up around the US, and at the time that I'm making this video, the UK just announced that they're going to lock down, with other countries like France and Germany also doing the same thing. Articles out there are expecting the second wave of the virus to be worse than the first, with projected record-breaking numbers in cases and deaths on the horizon. And it's starting to seem very likely that we're not going to be able to get a vaccine until sometime next year. And even if we got one earlier, and understandably so, it looks like the US population is getting more and more reluctant to take the new vaccine unless there's proven results of like effectiveness and side effects. So with everything trending in kind of a bad direction, it wouldn't be surprising to see the US follow Europe and do some sort of lockdown to try to manage the amount of cases, and that would put us into a similar situation that we had in March, where we saw the stock market dip. So whether you believe COVID is real or not, I think we can all agree from a market investing standpoint that there's enough concern and hysteria out there to expect some sort of volatility. What is good is that the Fed has pledged to continuously manage the circulation of money in the economy until the pandemic is managed, which is a huge reason of why the market even recovered when it first fell in March. So again, what happens in the next couple weeks can create some great buying opportunities for short and long-term investors. Just make sure you are investing in companies that have proven to withstand and can adapt to the effects of the pandemic. But after all that's been going on recently with COVID, with higher unemployment, with the dip in GDP this year, and the fact that some people are still not liking the video and subscribing to the channel, Why is it that the market is still at a current all-time high? Logically, it's a little bizarre that all these bad things seem to be happening, yet stock prices were still progressing throughout this entire time. So it's a little strange and even suggests that the US economy is not directly tied to what's happening in the stock market. And I kind of touched on this earlier, but I will contribute most of the growth due to what the Federal Reserve is doing for the economy. The Fed is the central bank of the US and is supposed to be an impartial manager of the US monetary policy and controls how money flows throughout the economy. A huge thing that the Fed did after the initial dip in March was they bought bonds and lowered interest rates. This made money cheaper to borrow and helped spur spending in the economy. I was even a beneficiary of this by refinancing my home and saving $400 per month on my mortgage. So you can see how lowering interest rates helps put more money in the consumer's pockets, so we can then spend it on businesses and investing to help boost the economy. And it works the same for like the big money investors like JP Mortgage and like those pension plans out there, which basically kept pumping money back into the market because they knew that they had the backing from the Fed. We also realized that companies like Amazon and Netflix could actually flourish during these trying times. And it's those kinds of companies that will keep our US economy growing. Regardless of what happens, these companies will continue to adapt and grow, and that's what keeps my faith in the US economy. And who are we kidding? Netflix and chill will never go out of style. Well, so what should we do now? What should the average Joe investor be doing with their money? Well, besides liking the video and subscribing to the channel, I would say that if you need money that you have in the markets currently, tread with caution, because I would expect that there will be some sort of dip due to the election and the COVID progression. But if you're like me, continue to invest money that you're not going to touch for years to come. Continue to monitor and buy into companies during the dip that can continue to survive in another lockdown. Personally, I will continue to pump more money into the S&P 500 index, and I'll probably buy a few more shares than normal if I see a dip. And if you've never started investing before, this is a great opportunity for you to experience volatility in the markets and kind of see how the news and how things are going in our country affect the markets and how other people's decisions affect your financial positions. So stay the course, continue to buy into the US market, and take advantage of all the craziness that there is around us. Thank you for watching the video. Please comment below and let me know your thoughts or your predictions about what's going to happen over the next few weeks. Maybe even challenge my views and let me know what you're going to be doing. I appreciate all of you for checking out the channel. If you could, please like the video, subscribe, and hit the notification bell so you don't miss any more videos from me, and you can join our growing family here. Thank you again for watching, and I'll see you on the next video.